Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Core and Factor Equity Strategist at Invesco, for a review of weekly performance in the Nasdaq-100. We'll also touch on the labor market, which continues to run hot. Ryan, it's great to see you as always. Welcome back to Trade Talks. And what stood out to you for last week's performance as it relates to the Nasdaq-100?
Yeah, thanks, Jill. It's great to be back. And really, it was the outperformance. I mean, we saw QQQM and QQQ trade higher by 3.89% and 3.88% respectively. That outperformed the S&P 500, which was up 3.08%, and the S&P 500 value, which was up by 2.87%. A pretty big bounce back week after a very challenging September for stocks, and certainly even the beginning few days of October. Really looking at an extension of the outperformance year to date, with QQQM up 39.09%, QQQ up nearly 39%. That's 24 percentage points better than the S&P 500, up just around 15%, and over 30 percentage points better than the S&P 500 value, up 8.5%. And then today, what was interesting, we saw stocks trade higher in the early part of the session, then trade lower into the 2 o'clock release of the Fed minutes. Then we saw stocks begin to climb higher after the release, and I think it's looking for direction somewhere, right? This morning we saw a September producer price index that showed a little bit of a reacceleration of prices on a year-over-year basis, both in the headline as well as the core. And then at 2 o'clock, we saw the release of the Fed minutes from the September meeting, where a majority of Fed officials said one more rate increase would likely be appropriate to cool off inflation and some of that demand, get it closer to that 2% target. But there was a lot of discussion around proceeding carefully, weighing risks of over tightening versus kind of under tightening, or being less restrictive, and worrying about inflation running out of hand. So kind of a lot of thoughts about a balance of risk. And the debate seems to be, as it has for the past few months, about the length of time that the Fed will keep rates at these elevated levels versus not necessarily how high they ultimately go.
And Ryan, if we take a look at the sectors that led performance last week, what did you see there?
Yeah, so from an attribution perspective, we saw 9 of the 10 GIC sectors that QQQ has exposure to finish in positive territory, and 8 of the 10 outperformed the same sector in the S&P 500. Much of that relative outperformance was overweights within technology and consumer discretionary. And specifically from a stock perspective, overweights to Meta Platforms, Advanced Micro Devices, Microsoft, and Tesla. That helped fuel some of that outperformance, and all of those names moved higher by 4.75% over the course of the week. Actually, only 11 securities within the Nasdaq 100 traded lower for the week. Next week, looking forward to Tesla reporting earnings next Wednesday, sort of the first of those QQQ heavyweights, and then others will begin to report that following week. So looking forward to that.
All right, and let's wrap up here and talk about the jobs market. I mean, last week coming in nearly twice as much as expected. I mean, the labor market continues to be hot, and not even that, but prior months have been revised higher as well.
Yeah, and not just slight revisions, right? I mean, we're talking about pretty large numbers here. The September 336,000 change in non-farm payrolls report, double the economist forecast for 170. And then the August report revised higher by over 20%, from 187,000 to 227,000. The July report was revised higher by 50%, from 157,000 to 236,000. So, you're continuing to contend with this labor market. And then the struggle is, you have the private payrolls report coming in at 263,000. That looked very different from the ADP employment report from 2 days earlier that only showed 89,000 jobs added in the private sector. So I think it's this continued kind of focus and how hard this job is to try to, from the Fed's perspective, try to navigate like really what data is correct, and trying to get a good grasp on what's going on in the labor market. And I think the worry there, of course, was, okay, you have this super hot job market, is this going to continue to bring wage increases and pressure prices to the upside? And, you look at Friday's average hourly earnings report, showed that growth was actually slightly lower versus expectations, with month over month only advancing by 0.2%. That's the same as August, and a little bit below the forecast. And the year-over-year growth also dropped to 4.2% versus 4.3% in August. So it's not like we saw this crazy increase or reacceleration in average hourly earnings. So I think, from that perspective, that helped give sort of the notion of the potential soft landing where we've got this hot labor market, but inflation isn't running rampant. We could just see this as good for the economy.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.